If your idea of a great night is binge watching television shows on Netflix, well, you're not alone. It's a big week for the video streaming company. Sunday night, it presented its 2016 programming lineup, and today, after the bell, we'll get fourth quarter earnings from Netflix. So joining us now to preview those numbers is Mark Mahaney, analyst at RBC Capital Markets. Mark, great to speak with you today. So a key metric, So a key metric to Netflix is subscriber growth. It's going to be one of the things investors are focused on. In the third quarter, the company added fewer domestic subscribers than expected. How did that impact the company coming out of those results? What are you expecting this time around?
There's a lot of fear in terms of those sub numbers this quarter. The big miss in the September quarter was on the domestic side. Domestic subs came in almost 30% below expectations and the company's own guidance. And there's a similar setup, similar fear now embedded in the stock this quarter. They had guided to about 1.6 million subs, and I think the buy side, the street is expecting a number that comes in a little bit lower than that. If they're able to come in line with their guidance and able to meet their 3 million plus international subs number, then the story will be intact and the stock should go up higher from that.
And given that fact, I would imagine international subscriber growth is going to be another key metric to watch. What else are you looking at? Are you looking at content costs as well?
Yeah, content costs are key. What's really key about the international sub number, however, is that they announced at CES the first week of January that they had expanded into an additional 180 million broadband households worldwide by largely finishing up their international rollout, with the major exception of China. But they surprised the market, and it's one of the reasons the stock moved up earlier in the year. But they surprised the market by kind of advancing that schedule. So the international sub number will get increasingly more important than the domestic one. Still, a miss is a miss. If they miss the domestic sub numbers, the stock will come down. And then in addition to the sub numbers, yeah, content costs, whether they can show some leverage against all of those content obligations that they've been building up over the years, that's going to be key to the story too.
Got it. And we know streaming is no longer a novel idea, and the company has a fair share of competition. How does it stack up against rivals Amazon, Hulu, YouTube, and even some of the traditional content creators that are rolling out their own offerings?
It's always been a pretty broad and diverse competitive set. At the margin, Netflix has kind of started to separate itself and has been over the last 3 years in terms of the number of subscribers that they have. They have multiples more paid subscribers than Hulu, well, Amazon's got an indirect subscription business. So we haven't seen those services yet really impact Netflix, but there's no reason why they couldn't in the future if they do something dramatic with their price or their content selections. It's always going to be out there as noise, competitive noise on Netflix. In international markets, the surprise has been that there seems to be much less competition than originally expected. So that could change, but to date, that's been the case.
And talking about the stock specifically a little bit more, Netflix shareholders have done, to put it mildly, very well over the last couple of years. Shares have surged more than 600% over the last 3 years. It was the top performing stock again in the S&P last year. What should investors keep in mind now? What's your target price? Where do you see the valuation of this stock at this point?
Okay. We have a $140 price target on the stock. The single most important thing to focus on in 2016 on Netflix is really this pace and the success with which they're able to ramp out into these additional markets. There's some in Southern Europe, but really this is a major Asia launch year. So how well they do in those markets, and there are very few U.S. content companies that have done well in Asian markets. Whether Netflix can buck that trend or not, that's going to really determine whether the stock by the end of this year is up 20% or down 20%, or even perhaps more than that. In terms of long-term valuation, the way we think about the stock, in terms of long-term valuation, the way we think about the stock is we think that this is a company that can generate $10 in long-term earnings power. If that's true, we think that's a $200 stock somewhere in the next 3 to 4 years. So below $100, there's a double on this stock. That's what we think the long-term earnings power is on the stock and where the stock can go to long-term.
Well, Mark Mahaney, thanks for joining us. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.